You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. You know, you thought you were done with us, off for a little bit there for the July 4th holiday weekend, but now we're back and ready to rock here for episode usually 2 of the bi-weekly options extravaganza known as the Option Block. My name is Mark Longo from the aforementioned theoptionsinsider.com, as well as, of course, from the ever-compelling, ever-evolving The Options Insider Radio Network. Again, glad to see so many of you joining us this week for our Pro Q&A. Had the Viceroy in the hot seat this week. That was pretty fun. It's glad to see a lot of you. We're enjoying that. Of course, got Options Oddities coming up tomorrow. If you missed all those, check out the Pro over there because you can get access to all those anytime you want via the Pro podcast feed over there, as well as you get some fun early other stuff thrown in there. You got an early taste of the huddle with Brian and everything else. When you do those double doses of boot camp, we're going to put those in there as well. So you're going to get early previews of shows as well. All sorts of fun stuff. Check it out. theoptionsinsider.com/pro is the place to go. And you know where to go for all your fun and your questions about options. Send them to us. We'll take them. You know where to find us at Options, most of the major platforms out there. If you're on the member side, of course, your questions get bumped to the top of the list out there. But we do love to hear from all you guys and gals out there and see who we're hearing from on the program today. Let's go back out now to a quiet, a sleepy, a tranquil hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
To Jakarta.
Oh, always good to be here. And yeah, Andrew and I were saying some stuff about you. So apparently it didn't go to the general public. We said you were selling naked options while you were actually naked. That's what Andrew said.
Well, that's my rule. You know, if you're going to sell naked, you got to be naked. Is that strange? I think that's just normal practice for most people, is it not?
I don't know. I never sell naked options. I wouldn't know.
Well, there you go. See, maybe that will incentivize you to go to the dark side of naked land. There you go. Nothing but short wings for me as we keep on rolling on out to the land of the fortress-like compound, where we are joined by the Rock Lobster, Mr. Andrew G. from OptionPit.com, by way of a curiously anti-American jingle. Mr. Rock Lobster, welcome back to the program, sir.
Anti-American, that's right. What was that? I was still trying to remember what, it was quite funny. Leska put it in there. I'm okay, but I am pro-American. I am not anti-American. Much as that jingle was maligning me. But anyway.
He takes umbrage, even had his own jingle, listeners, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody. Let's kick it off. Let's get into it. What is lighting up our tape here for our first and only OB show of the week this week? And it seemed like things might be looking a little dire to kick off the day. Things looking a little bit better now. Still firmly in the red here as we kick off the show. Most of the major indices, the S&P, the Dow are tied right off about 0.7%. The NASDAQ's off about 0.6%. Of course, all of these much higher than they were earlier in the session where we saw a lot more red. All those looking for a little bit of downside today. You got a taste of it. And then looks like it might be mitigating, but who knows? These are these weird times. We could see the worm turn again by the end of the session, or we could end freaking green on the day. It wouldn't surprise me that way as well. Coming into showtime, we had the vol products feeling their oats earlier in the session, now coming back down the other side of it. Still up from our last show a week ago. VIX cash coming in to start the show a little bit north of the 18 handle, about 18.15. Puts it up a little over 1.5 points, about 1.6 points from where it was this time last week. Of course, they hit a high north of 20. Broke the 20 handle ever so briefly this morning, listeners. Got about a little north of 20 there, but nothing that it could sustain for long, as the Rock Lobster will, I'm sure, bemoan in a little bit. This kind of gets back to what we've been saying for a while. If you got some stuff in the hopper, I had some VIX flies to the upside. Did I get them off? Nope. Busy doing stuff for you guys. So that's the kind of world we live in. Still looking pretty good right now, so I'm not too angry about it. VVIX at about a 120 coming at showtime, back up to that 120 level. Likes to kind of gravitate up there when things start rocking and rolling. Up about 13 points from last show. VXX back north of the 30 handle, 31.25 to be precise. That's up about 2.25 points. Hit a high of about 32.33 earlier this morning. So a little bit off the highs there, but also north of the 30 handle. And Vol Q, aka the at the money vol of the NASDAQ, that's about 1880 or so, coming at showtime, up about 2.25 points from last show. And since I know he's out there taking umbrage as we speak, let's start with the rockingest of lobsters. Mr. Rock Lobster, sir, what's lighting up your tape in this day of umbrage?
Day of umbrage, as usual, listeners will know, I never get great prices. Like I have a bunch of finance SPY puts, and they're like around 420, 418 though. And I thought, I saw 20, 30 cents, getting a little bit, they're starting to get frothy. And then just as I was getting excited that they might be worth some big bucks, they pull the rug out from under all the vol. As usual, it doesn't last past about 10:15 Eastern time. No sell-off is allowed anywhere, anytime. The good news is a lot of VXX and VIX puts paid for all of that stuff. So, but it was not a home run. It was just kind of let's just call it barely a single. So as far as that goes, I did see a little lift in the August volatility in VIX. I saw a little bit of lift out there. The contracts I thought were very cheap, and something we had at our Vol Trade Club last week, so we were able to sell some stuff. But again, they weren't taking anything really this morning. So that led me to believe that this sell-off in the SPY was short-lived. Like when you're trying to sell call spreads in the VIX and you're doing midpoint and the bid keeps going away, that means SPY is not going to be where it is for very long. Most likely going to rip. So anyway, for the listeners that like to trade or a little more active and you're trying to sell or dump some call spreads into a VIX rally and they're not taking them, usually that means SPY probably won't hold that level and will pop, and it'll start to pop, which it did. So I would not be surprised to make me totally grumpy today to watch SPY go all the way up, which is not terrible, a totally terrible thing. And vol close back to even. I won't be. Let's put it this way: by Friday tomorrow, I'm not going to be surprised if VIX is back where it was or lower than it was yesterday on the close.
What's weird about all this, though, is that I had some, vestigial bids floating around there in products like VXX for puts and things like that. And they didn't fill me on those this morning. But they did fill me on those not that long before showtime there. So they weren't really selling. They weren't really giving you my stuff in VXX, even in the height of the rally this morning to the downside. But then once things started settling down, then they came in and started even giving you far downside in VXX. So a bit of a strange morning, I think, to say the least, out there. I expected to be filled a lot sooner than I actually was, which is kind of weird out there. Mr. Uncle Mike, I know it's not an Uncle Mike type of day out there, but what is lighting up your tape in this mostly red, but I guess it kind of depends on your frame of reference. If you've only been watching in the last, let's say, hour or two, it's looking kind of green.
Oh, shoot. I expanded my screen on my chart for the day. I didn't know this happened. No, just kidding. Yeah, and looking at it today, I think that we were due for some type of a pullback in some way, shape, or form. We haven't had a day like this in a while. I think the news that brought this about was twofold. I think the Olympics saying that they're not going to have people, I guess. So that's something that was that spooked the market a little bit after the close yesterday.
Which is weird because I thought that was a done deal. I thought we all knew that. I thought they had announced that a while ago, but apparently not.
Yeah, so I guess that's something maybe people were hoping for it. I'm not sure. But I think the other thing that's really making news headlines is the 10-year note, in that I believe we got down to as low as 1.27 on the yield at some point today. So a lot of bond buyers right now. So maybe the market's a little bit spooked because of the activity in the bond market. So we're definitely doing something there. I'm actually pretty cautious right now in the bond world. I mean, I'm still selling my puts on IEF and covered calls and whatnot. So I haven't changed anything as of yet. But I'm pretty cautious from the standpoint that I'm kind of excited about when tomorrow comes, when I can eke out a little bit more time decay and either get the option to expire worthless, because I am okay being assigned on it, or getting out at a small price. So we're at a stage right now with the bonds where it looked like if they would have made it past levels with which they were, it could have added to somewhat of a breakout to the upside with the bonds themselves. But for right now, it looks like we're holding. The levels with which we have are similar to where they were in last February, or they are where we were in last February when we started to have this sell-off in bonds themselves. So I think we're at a pretty key point in the bond market right now, in that from the standpoint of a chart, we are at very similar levels to where we were in February when we started to really sell off. And I'm going to be curious to see if we can break through these levels. Now, markets, I think, are due for a little bit of a pullback in some way, shape, or form. And so today is really rather mild considering the upside with which we've had recently. But I think the key of what we're going to need to really be watching right now is the 10-year note at this stage. If the 10-year note continues to rally, or the yield go down, whatever way you want to look at it, then we might be in for more selling in the stock world. I personally think we're probably going to pull back a little bit in the 10-year, meaning the value of bonds themselves, or the value of IEF for that matter, will go down. And I think we're going to have more buyers and stocks in the near term. But I think we're at a pretty key point in that if we don't get some sellers in bonds and buyers in stocks soon, the action that we're seeing today of bond buyers and stock sellers could definitely continue.
Could indeed. If you like all that rates talk, stay tuned for TWIFO. I got a feeling there's some rates on our movers and shakers report for this week. So we'll probably be getting into rates. I'll be joined by the once and future Dr. Bix there as well. He loves to talk rates. I got a feeling he's going to drag me to the dark side of rates yet again. So stay tuned for that there. Listen, probably I'll talk a little bit of vol there as well. It is inescapable these days. You know what else is inescapable on a day like today? Is a little bit of volume. Let's start out there in VIX land, where it is finally north of its ADV again. About 470,000 contracts on the tape right now. The ADV is 451, so maybe a little bit more paper on the tape. You might see that ADV actually start going in the other direction. Remember, it was north of 600K not too long ago. SPY at 3.3 million. It's almost at its day ADV as well. The ADV is about 3.5 million. That's come in quite a bit as well. That was well north of 4 not too long ago. The S, 858,000. I thought the S might be threatening a million right now, but 858, the ADV is 1.33. That has ticked up a bit as well. The Qs just a tick under 1,987,000 over there on the Qs. The ADV is about 1.25 million. And small caps through the lens of IWM, they are on fire today, at least from a volume perspective. 722,000 contracts on the tape. The ADV 560, selling off about 0.6% out there today. So pretty much in line with everything else out there. But I got a feeling they'll be lighting up some of our movers and shakers a little bit later today on TWIFO as well. In terms of what's lighting up single names, this is where a lot of the crazy action has been of late. So let's see what's lighting it up. Single names cost you 232,000 contracts to break into the top 10 today. That's decently active, all things considered. We've had days much less than that. That gets you all the way to Softy, number 10. Number 9, Bank of America, 255 on the tape. Number 8, the Amazonians back in the top 10. Good for 379,000. So number 8, we're already threatening 400K. Number 7, it's Baba. Baba back in the top 10 as well, 381,000. Number 6, AMD holding strong there, 389,000. Number 5, it's Neo, 420 on the tape for number 5. Number 4, it's good old space. Will they make it to space or not? Will this billionaire race to space, how will it conclude? Will they survive? Is this a billionaire balloon race redux here? We saw that about a decade or so ago. That one ended tragically. Let's see if this one can perhaps avoid it. Either way, space good for number 4, 428,000 contracts. Number 3, it's Tesla, usually good for number 2, but today number 3, 784,000. Numero dos, it's AMC, just a tick under 1,990,000 contracts on the tape for AMC. Number 1, the big dog, Apple, feeling its force today, feeling the gusto. 1.63 million contracts on the tape. It's only off about 1%. That's the most paper we've seen in Apple in quite some time. Apple's just, man, dominating the tape out there, saying, hold my beer, kids. Let me show you how it's done. Let's see. The most biased paper on this list looks like it's Tesla with 81%. The rest are remarkably even. Microsoft's 52.48. You never see that in the top 10. Bank of America, 58%. Baba, 56% on the call side. AMD, 57%. Wow. This is one of the more egalitarian days we've had in the top 10 in the terms of the balance between puts and calls. AMC, 57%. Tesla, 61%. Wow. Only a handful are really very aggressively call heavy. Space at 81%. And that's pretty much the winner. And then we've got Apple at 74%. And that's kind of about it. The rest are in the 60s or below. That's very strange for the top 10 day. Usually you never see that. Speaking of numbers and what we're seeing out there, like I said, we finally got the numbers after our last show last week there for the good old OCC for June. And of course, we had no show on Monday, so we are left to break it down today. But people kept wondering, they keep asking for 2021, can the party continue? And the answer, at least for June, was yes. June volume up 25.6% from June of last year. And we all know 2020 was no slouch when it came to options volume. It wasn't the most active month in history, but it was pretty darn close. It was the second most active month in the history of the options business. And of course, the most active June in the history of the options business. They cleared 870.1 million contracts. That's up 32.7% from June of last year. Looks like 32.7 is the actual percent. Year-to-date ADV, that's a lot of people are watching, see how the volume is holding up. 39.4 million, that's up 25 points. So that's what they're quoting. They're quoting the ADV is up 25.6%. And the June itself was actually up 32.7% from this time last year. So yeah, the ADV looking strong, listeners. If we're up 25% in terms of volume from last year was already a redonkulous number, to use a technical term. Up 25% from that. That's a crazy year, and it's not like we're in January. We're already pretty much halfway through the year. Let's drill down a little bit, because obviously OCC clears a bunch of weird stuff. Options, that's where we're looking. Equity options, 866 million. That's up 25.8% from June of last year. Let's drill a little farther down. Equity options, 826.5 million. That's up 26.9%. That number includes cleared ETF options. If we pull those out, they were 203 million. That's actually a 17.3% decrease from June of last year. Let's also pull out index options. They were 39.6 million contracts. That's actually up almost 6% from this time last year. And year-to-date ADV for options alone is 39.1 million contracts. Futures, as we mentioned before, they were a bit of a bright spot the last couple of months after kind of languishing for the better part of the last year. Back to the dark side again. Futures volume, pretty much 4 million contracts. That's almost a 10% decrease from June of last year. So whatever was keeping VIX numbers afloat on the future side, not so much this week. Also, not so much on the earnings front. We're pretty much done here, listeners. We're kind of just rolling into the beginning of the next season, pretty much. So remember, last season looks like it finished up around 74%. So after starting strong and coming in like a lion, and Matt even predicting this was going to be the season that the worm turned, at the end of the day, 74%, not exactly lighting it up. We have some names popping off later this week. We have Levi's after the bell on Thursday. Let's see, they were at 28, pretty much even when we ran these numbers right before the show. And let's see, the straddle 215, and in the past they've moved $1.37. So a little bit of juice in Levi's land. That's kind of interesting. And then it all kicks off next week, listeners. Now we're back to the races with the financials again. JP Morgan on the 13th, they were at 153.5 as of this report. They're pricing in, get this, 410. That's pretty juicy because in the past they moved 267. So again, financials have been moving a bit of late, so maybe it's time to price a little bit more juice in there. We've got, what else do we have here? PepsiCo, they're on the 13th as well, about 150 as of this report. They were pricing in 274. In the past, they've moved 209. So a little bit of extra juice in PepsiCo. Let's go to good old Bank of America as well. They're on the 14th before the bell. 39.75 is where they were as of this report. They were pricing in $1.29. In the past, they moved 119. So kind of in line with expectations there. If you want all that data for yourselves, theoptionsinsider.com/ just go to the options news and articles tab there. You'll get all that fun stuff for yourselves. As we keep on rolling, it is time to unleash the Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's kick it off. Before we get going, Mr. Rock Lobster, any of those OCC numbers surprise you? Busiest June in history, second busiest month of all time. Any of that surprise you, sir?
I mean, it surprised me a little. I don't recall June being a huge month for like the broader market. I guess for QQQ it was pretty big, but I'm just going to say meme land is not dead by any stretch. I guess we had a pretty good, like 338. I mean, there was 20-point rally in the Qs for 440, so 340. Well, still almost a 20-point rally in the Q. That's like a huge month, actually. Now that I look at it, it kind of snuck up. So what was that? 8% month, something insane like that. So. So it surprises me that the volume keeps going up when we think it's getting less busy, but in reality, just those massive volumes on these meme stocks, that customer has not gone away. And I would have guessed like in January, February, they would have gone away, but clearly not. I don't know if it's all the stimmy checks still, but they're still there.
They are still there in droves, just not in VIX futures, apparently. But everywhere else, they are still there. All right, let's go on out. See what our Eye of Sauron found today. It must have known you were coming on the show, Mr. Rock Lobster, because it found you a nice juicy line in the sand put to kick things off. Going back out to the railroads. Haven't talked railroads on the show in a while. In particular, Union Pacific Corp, ticker symbol UNP. Trading right now a little bit shy of 220. Almost 219.5. That's down nearly $9, about 8.75 today, nearly 4%. So rough day here for UNP, but dialing it back a little bit, going back out a year, decent year actually, up nearly 30%, about $50.5 A year ago, it was trading right around 169. And then it had some nice runs. It ran all the way up to 209. It's not that far from where it is right now. That was back in October. And then it sold off hard. And by October 16th, it went 209, almost 210. By October 28th, it was trading 173. So it got clipped pretty aggressively. But it came roaring right back. By November 24th, it was trading about 209 again. So weird little V-shaped dip there on UNP. But they got it all back, and then they rallied harder. By January, they're trading almost 220, so pretty much exactly where they are right now. And then they kind of gave it up a little bit down to 194 again, then before they rallied back in March, back up to 222, almost 223. They hit their high of 231, looks like in May of this year, right around May 7th or so. And then they've kind of been bouncing in this kind of 220 to 230 range ever since. And they were just 228 in our last session, and then they sold off hard today. So taking a bit of a drubbing today. Let's see what our Eye of Sauron found. Looks like, Mr. Rock Lobster, it's your favorite, your go-to bit of strategery. It is the line in the sand put, in particular, the AUG pars, this time the 200s. The AUG 200 puts going up a couple of times. First, the big block that caught our Eye of Sauron's attention. 8,732 of the AUG 200 puts going up for $1.83. That's right off the bid there. Pretty juicy. Let's see, the IV was about 27.3%. The stock was 218.5, so actually about over a point lower than it is right now when this went up. So maybe they caught the bottom. I don't know. We shall see. There are earnings in this cycle. They are on July 22nd, so this has some earnings juice baked into it. He wasn't done there, though. Another 1,000 went up a little bit later, for actually a minute earlier, so for $1.86. And they did a total of about 10,000, looks like, on the day coming into showtime. So somebody's got a bit of an axe to grind on this 200 level. And again, it's a bit of a distance now, but they have broken it multiple times over the past year. They were 194 back in January. They threatened it a couple of times later than that. Of course, they were trading much lower than that about a year ago. So it is conceivable, Mr. Rock Lobster, that they break this line in the sand. What do you think about this one? About 10,000 of these, right around $1.85, $1.86 or so. Nice 27 vol, only out to August, but it does have an earnings cycle baked within it. So what are your thoughts here on someone drawing a decently sizable line in the sand in a railroad UNP, sir?
It's quite a, well, let's just say here, let's see, they're two, like $4.10. Very, very interesting line in the sand. So at $10, that's $10. That's 20 times their earnings. I'm just doing a little quick arithmetic. So they are taking a spot, let's say. And I mean, the reality is, it's the last 3 months probably hasn't dipped below 215. In the last year, it made only when we had, when we had that kind of sadness. Remember, there was this, I guess the COVID sadness put it to 170. So when you look at it, I don't think it's a bad, they're almost getting 1% for August. So I don't think that's too bad. It's not a bad sale. Like 170-ish was kind of the COVID low. So I think the 200s, I think they're looking at free money there, line in the sand. So not bad. I want to say not bad on this one. That would be like, I like 5 lots for stuff like this, because that way you don't get so grumpy if things get down there. But it's not a bad size. Obviously, they're doing a lot more. But I'd say this is a very reasonable put sale for somebody that wants some yield, almost 1% to August. So that's a little light actually for me, because that's a little more than a month. So, but not terrible, but I like at least 1% per month if you're going to sell put.
Not terrible, says the Rock Lobster. Yeah, I don't hate this one either. Not a bad one here. So we'll put it in our to be watched category. We shall come back, see how this performs, listeners. As we're going to flip the script now, we're going to go the other way. We're going to go a little bit longer term, and we're going to buy some puts instead, this time in Alliance Data. This is a provider of loyalty and marketing services. They do some of those, loyalty cards you guys probably have clogging up your wallet out there. Trading right now 102.37. Not a great day for them today. They were off about 1% today. On the year, though, different story. They've more than doubled, up 141% on the year. A year ago, they were trading $42, about 42.5, and they rallied up to, by December, were trading $83. They had almost doubled pretty much by December. So not a bad run there. Then they kind of hung out there for a while, actually sold off a bit by the end of January. They're trading 67 again. Then they rallied again. By March, they're trading 113, so actually higher than they are right now. It's like they topped out at 128.16 again on May 7th. Another. We were just talking about May 7th on the last name. Maybe that's our new June 8th. We shall see. 128.16 was their high there. And then they hit it again, close to it on June 1st. And ever since then, it's kind of been trending down to where we are right now, 102.36. So they're off about 20 handles on the course of pretty much this past month. So not the best in terms of near term. Over the little bit longer term, out about a year, looking pretty good. Looks like someone, Mr. Rock Lobster, maybe this recent sell-off, maybe has them a little bit spooked, because someone came in today gobbling up 5,400 of the Jan 80 puts for $6.15 right off the offer there. That is nearly a 55 vol. So that's a pretty lofty vol level for a loyalty card data services company. Again, they have doubled more than that over the course of the past year. So some vol is certainly warranted, whether it's about a 55. That's open to interpretation. They came back and did more. About 8,000 had gone up by the time we kicked off the show here. The stock was a little bit lower when they bought these, 101.80 to be precise. Obviously, there's earnings between now and January. The next announcement is on July 29th. So, Mr. Rock Lobster, this is a pretty hefty put to pick up. Also, this is kind of one of those puts where, you look at it and you say, what are you really protecting here? Because you bought a put for $6 that kicks in when you're $22 below where you are right now. So you got to sell off $22 and then your $6 that you paid. So you're talking nearly $30. So I use the term protection on this one kind of loosely. Now, of course, if you go back to a year ago, then you're looking at keeping some of those gains, but you're giving up a whole heck of a lot of them. So I don't know, Mr. Rocklops. This one, I can't exactly say this is giving me the tingles, sir.
It's not getting you in your nether regions, is what you're telling me. You're not feeling this one.
No tingles in my nether regions. There you go. You sound like Dan yesterday. Dan was dropping F-bombs like crazy on our Options Bootcamp show, which apparently the listeners loved. So I guess we need to do more of the less family-friendly stuff. But we had to beep them. I have to start beeping you, Mr. Rock Lobster.
See, that'll be the day when you beep the Rock Lobster. When you beep the Rock Lobster. But anyway, let's, a little bit beefier put. I would say this is taking a page from Mr. Sebastian. We do this thing called the Market Newsletter. The Warren Market Letter, actually, named famously after somebody, Warren something, I don't remember, some investor guy who's pretty smart. So he takes the approach of selling puts like this, like into downturns. Stocks we want to own, we size the portfolio up properly. Let's say if you have $100,000, you want to invest in stocks, and you're generally looking for 20 to 25% out of the money. And you're looking for net yields of, 8, 7, 9, 10% a year minimum, something like that. This would be about 8% for half a year. So that's not bad, 8% for half a year, to sell a put that's 20% out of the money. So again, that's actually something we're going to launch, shameless product plug, but just showing people how to sell puts in such a way where they also want to buy the stock for a much lower price. And I know buying stock at a much lower price is music to a certain Uncle Mike TOSAW's ears. But again, this approach I think is pretty good for people that want to be equity holders. And, you're not really thrilled with the heights of the markets. And you're like, 20% is a good place. 20% is a good place for me to take a dip into this stock. You just have to be mentally able to do it, is what I would say. So I think a lot of big stocks like this make better candidates, and you got to be realistic. VIX is 18. So for all of you out there, that's about a 50%, a big chunk, for a lot of not 2020, obviously, but for the rest of time immemorial, VIX kind of can poke around 12. So you're getting, basically 50% more juice to sell the same put for the same amount of time that you normally would. So you don't normally get that kind of money. So I think it's not a bad strategy for people. Again, you have a portfolio, you want to be an investor, and you're looking at prices about 20% out of the money, but you're looking at yields 10 to 15% on your risk capital, which, or you get the stock 20% lower. So not a bad deal. So I actually like this as a strategy. And we've had really, obviously, 2020, a blockbuster year for the strategy. And even outperformed the S&P 500. Pretty well, surprise, because it didn't do anything. It went down a lot, then it went back to where it started. So, but again, I think a pretty good strategy overall for those that are able to do it. And Mr. TOSAW probably has something to say on that subject, but not everybody is, I would say, like mentally happy with selling puts.
Yeah, I definitely would prefer to sell this put. You could buy this and very easily end up with no joy, even if it works in your favor. Listen, this one's a rough one. You got to probably sell this one. When we get to Uncle Mike, I want to invoke him as well, but I want to rope in this last one here as well, because this is right up Uncle Mike's alley. Going out to Silverland. Uncle Mike, he of the infamous silver 2-year collar upon which he did nothing. But today we're kicking it up, going to SLV. We're going out to Endeavor Silver Corp. This one trading $5.56 right now. Had a good year. It's up 128% over 3 handles over the course of the past year. A year ago was trading, $2.43. So a wee bit lower than it is right now. It's off about a quarter today, or about 4.5% today. But then it's had a nice run, as you might imagine, kind of following along what's been going on out there in silver. Let's see, how high did it get? Yeah, in the heady days of the threatened silver squeeze. Actually, this looks like later. This is June, so this is after the silver squeeze. But it topped out at $7.76. Interesting. About $2 and change higher than it is right now. It's $5.56 right now. And it hung out there for a while, and then it has sold off now down to where it is, $5.56. So it had a nice run all the way up to $7.76, kind of coming down the downside of that a little bit. It's like someone coming back saying, hey, if we get back up there, I don't mind letting some of my silver go, or in particular my Endeavor Silver Corp go here, because someone came in and blasted out 3,000 of the D7 halves for $1.50. Again, on the bid there, that is a 78.5 vol. When I first saw this, I read it very quickly and I said, wow, D7 and a halves for a $5.50 stock for $1.50? Sign me up. Then I looked at it again. I said, oh, D's of next year. D's 2022. That makes a little bit more sense there. And then I'm less excited about this. Then I'm kind of like, all the way through the next year. It's a decent amount of juice, but this one doesn't get me as excited. Mr. Uncle Mike, you're our resident silver bull here. Also, you like to sell a call or two. What are your thoughts on dumping these 7 halves, a level where this name was trading at just a couple of weeks ago, all the way out to D's of next year for $1.50, sir?
Well, I mean, it's not even if it is until D's of next year for a stock of that price. I think you're getting, just doing some caveman math in my head, it's a $5. If it's a $5 stock, you're getting 30% over the course of 18 months, and that's not a bad thing by any means. You said it was a $5 stock?
$5.56. You're getting about 27%, to be precise.
Okay, got it. So you're still getting some pretty nice premium. Now you're going to have to go for a ride to earn that premium. You're going to have to ride the stock roller coaster, because stocks that have that much premium definitely are have that much premium for a reason. So in looking at it, I like the concept of it. If the owner of the stock is fine leaving it at that price, then I think it's a great idea, because of the fact that if you're looking to have that holding period, if you're okay going through the roller coaster for the course of the next year and a half, then I actually like things like that. The neat thing that I like about silver that I always talk about is the reverse skew that exists, is that call prices are typically higher than puts. Now, I'm not familiar with this stock, but I'm guessing it has a similar reverse skew to it. If you were to look at the options, once again, I don't know, I'm just guessing. But I think that if you are okay with holding for that amount of time frame, I think that's some pretty decent premium for your investment, especially if you're okay getting called away, which apparently this guy is.
Yeah, he doesn't think he's going to sweat it if it gets up to 7.5. But if it gets another rampage, another year like this past year, he may be regretting it. It's an interesting trade, though. I agree. The percentage-wise, definitely much more exciting if it was decent this year. I was very impressed at those levels. I didn't think that was a supportable level, and it turns out it was not. So my instincts were correct. But nonetheless, it's an interesting one. I guess we'll come back to this one as well. We'll have to watch this one for quite some time, though. We'll come back in D's of 2022. Who knows what madness will have beset the world by then if the last year and a half is any indicator. But now it's time for your madness, listeners. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, let's get to it. We got Nichols chiming in about the Delta. Maybe we'll save that for ball views tomorrow. We got my boy Luigi. He says, VIX puts, ride or die, baby. Yeah, go for it. Why not? As my little guy would say, why not? So go for those ride or die, them there VIX puts. Let's see. Will the worm turn today? Will it not? We shall find out. Speaking of finding out, I wanted to get your guys' thoughts on this as well. This was the topic, a question we had sent in. It was kind of one of these general ones to whatever show you want. We discussed it on Options Boot Camp, but it's a big one. People have thoughts on this. So I want to get your guys' thoughts on this as well. This comes from Lauren Messerly. She says, can you guys do a podcast that goes through the recent Robinhood FINRA ruling and explains the violations? Lots of options talk on pages 5 through 20 of that ruling, and she included the link to the ruling. And we spent some time going through this. I was looking through this myself, and we all know Robinhood is not exactly a leader, a class leader when it comes to options service or quality of their platform or anything therein. But this kind of takes it to the next level when I read through this. Let me read some of this for you guys, and I'll let our listeners hear this as well. Then you guys could chime in. These are the many things that triggered the record, was it $70 million fine from FINRA, the largest fine they've ever given here. Of course, SEC also doling out fines for Robinhood as well, but that's a separate issue. One of the things that FINRA flagged them for is they misled customers when it came to margin on their accounts. They said Robinhood falsely told their, quote, Robinhood Instant customers that they had the ability to upgrade to they were required to upgrade to Robinhood Gold to trade on margin when in fact that wasn't the case. So that was a lie. And then they also told their Robinhood Gold customers who were paying, I guess, for this extra service that they could, quote, disable margin on their accounts, but then they still let them go put on options trades like spreads with short legs that would potentially trigger margin. And so they were wrong on that account. They also, this is one of my favorite things, they used bots to approve options customers. And I get it. They have a flood of people applying to their platform, so you can't really have a single person sit there and approve every one sometimes, but they pretty much solely relied on bots to approve their options accounts. And these bots were pretty stupid, it seems like. You could come in there and pretty much say whatever and get approved for options trading. FINRA lists a couple of examples. You could say customers are coming in who were younger than 21, and said they had more than 3 years options trading experience, which you need to get, the higher level approvals. And the bot would just agree to them. It couldn't do the basic math that they weren't really trading options before 18. So that threw them off. They said people who indicated they had a low risk tolerance and other things that made them less suitable for some higher level options trading, they approved them. And this is one of the better parts. The bots only took into account the most recent information provided by the customer. So if you went to the Robinhood form and filled out, let's say you filled it out honestly the first time and you got rejected somehow, the bot did its job. You could go back in instantaneously within seconds and fill out the same form again, do completely different answers, and get approved. Because the bots couldn't even remember that you had just filled it out let's say 30 seconds. FINRA themselves say people filled it out often minutes earlier and got rejected and then came back and changed their answers and got approved. So they said Robinhood failed to exercise due diligence before approving customers for options trading. As a result, they approved over 800,000 customers. 818,000 is the number FINRA lists here to approve for options trading when they probably shouldn't have been. Let's see. Also, the fact that they touted the fact that you could disable margin confused a lot of people. In particular, they cite that tragic case of that kid who killed himself after having that put spread, I believe it was in Amazon, get assigned against him. He thought he had disabled margin. He thought this couldn't happen to him. And yet they let him put on trades where margin could become an issue. And so as a result of that confusion, it's one of the reasons why he took his life. So it had very tragic consequences in that sense. Also, yeah, he put in his suicide note that he thought he had turned off margin in his account. So horrible stuff. They also, this is another bad one. They completely just inaccurately and misrepresented the risks associated with options trades, in particular, as they say, options spread transactions, and also what Robinhood would do to mitigate those risks. Let's see. So they listed spreads and they talked about how you couldn't lose more than you paid on certain spreads, and they said in all scenarios, when there's not the case in every scenario out there. And they say as a result of these emissions, at least 630 customers lost almost $6 million as a result. They said because Robinhood misstated the risk of loss associated with option spreads. And let's see, they also apparently just flat out lied about closing out your positions prior to expiration. It's just mind-boggling, some of this stuff. You know, everyone who has even a basic broker, usually if you have options expiring, they send you some sort of notification. Hey, these options are going away. You need to do something about this. Robinhood sent the opposite email. They said, hey, you have options going away, but don't worry about it. If you had short positions, they said if your stock goes, quote, as they put it in their terminology, below the low in the case of call credit spreads or above the high in the case of put credit spreads at expiration, Robinhood's automatically going to let those expire worthless. That's just their service for you. And so you don't need to worry about, quote, checking the app, even though then saying nothing about the fact that you can get assigned on that short leg and nothing to do with that. And so some customers had that happen to them, I think in particular in Tesla, and they got wiped out pretty badly as a result. Robinhood also said if you have positions in options and you don't have the amount of capital needed. Well, first off, they told people they had enough capital when they didn't, so that was just erroneous. And then they said if you didn't have enough capital, don't worry. We will sell out, we will close out your short positions, so we will buy it back for you right before the close, so you don't have to worry about getting assigned on this or not having to have the capital or deposit more money. We will close those out for you. And then they didn't do it. So people who have these positions who were told by Robinhood, yeah, we're going to take care of that for you, don't worry, they didn't. And so they ended up having to have a whole bunch of crazy issues. They say here, an example, FINRA cites 130 Robinhood customers who had Tesla short option spreads on September 4th of last year incurred tens of thousands of dollars of losses in each, even though Robinhood had informed them that their max losses would be a fraction of that amount because they would take care of it for them. Yeah, this is a good line here. Robinhood also falsely told customers who had entered into option spread transactions that the firm would sell rather than exercise their long options if they did not have the buying power necessary for exercise. So yeah, it was actually the long side. They were going to sell them out for you. But instead they didn't, and they exercised them, and customers incurred significant losses as a result. So it's just stunning stuff. But yeah, they say, we will automatically exercise any option in the money if you have enough buying power. If you don't, we'll sell your option for you about an hour before it expires. That's a lie. They did not do that. Let's see. They were supposed to have due diligence on approving the options accounts. Like I said earlier, they had mostly all bots approving these accounts. They're supposed to have registered options principals supervising that. They really didn't. They said these registered options principals, when they actually went and looked at the numbers, they only reviewed about 20 accounts a week. That's less than 0.1% of the amount that the bots were kicking into them. So the registered options principals weren't doing anything. They also cite them for having untrained staff answering calls and communications with people. Said that people gave communications to customers that were inaccurate and misleading. They later published statements on their website and mobile apps that were also false or misleading. Even more damning, a lot of this stuff is still happening. Robinhood came in April of last year after getting dinged the first time by FINRA and SEC. They did a bulk downgrade of a bunch of their options accounts, and they revised their criteria again later last year in September. But they're still having to do these monthly, now automated bulk downgrades of their options traders because they're still approving people apparently willy-nilly that should not be trading options. So all of this, and of course they also cite a bunch of the outages that happened at Robinhood and everything else is there. So all of this added up to $70 million, the largest fine in the history of FINRA. A lot of people are asking us for our thoughts on this. Like I said, I gave a lot of mine yesterday. So I'm curious for you guys. Maybe Uncle Mike will start with you. This is pretty bad stuff. I'm curious what your thoughts are on this and this historic fine as a result.
So it's like, there's the parent that wants to tell the kid to wear his seatbelt when he goes out in the car. Oh, I'm not going to crash, Mom. I'm not going to crash, Dad. And it's just a dumb 16-year-old, and sure enough, he crashes and wrecks the car. Or you need to wear your sunscreen, you need to wear your helmet or whatever. The parent says that, and you get some punk kid that won't listen to his parents. That's what it sounds like, the group of punk kids that were running Robinhood that are doing these things. I mean, it's obvious they're thinking, well, why is the rest of the business so stupid? Why don't we just sell them? It's that easy. Why is the rest of the business so stupid and having these crops? And why do you need a Series 4 to do this? We can just have bots do it. That's just stupid. Why? And so it makes me happy that they're getting fined a lot for this, because it's stupid people like this that give our business a bad name, quite frankly. And so it bothers me a lot. I mean, the only other note that I heard in there that I thought was interesting is that whether you need margin or not need margin to do spreads, back in the old days, about maybe 15 years ago, you could do a spread in an IRA and did not have to have a margin agreement because of the fact that you're really not using margin the way margin traditionally is used. Now you have to have a margin agreement to do it, even though you don't have traditional margin powers like you would in a non-IRA margin account. So that one I think is kind of confusing on the side of the SEC. But to sum it all up and everything else that I heard from this, Robinhood sucks.
Yeah, this is a no bueno. Mr. Rock Lobster, your thoughts here on these kind of litany of just failures and falsehoods and outright lies from Robinhood, sir?
What always intrigued me about Robinhood is I think they got into the stock bit trading business. Like, okay, we're going to do this great thing and we're going to allow people to invest for free, right? And I think that's kind of how they started. And then they realized that, wow, we're not going to make any money doing this because of the actual way the business works. I mean, there's payment for order flow for options, probably payment for order flow from stock, although I'm not 100% sure anymore. But I know, who's going to take the other side of the flow, especially over the counter. So, okay, so all of a sudden, and maybe the average customer did like 1 or 2 trades a year. And it's just, there's no money in it. Because I remember Schwab, their average, we're going to call their average customer, right? They just don't buy and sell a lot of stock. They have a Schwab account and maybe, they have money in their IRA or something, but that's a separate business. So all of a sudden, Robinhood, I think, kind of fell into the options business when they discovered that's where the money is with the active trader. And then they would go sell that order flow. Probably Citadel said, hey, why don't you guys do this? Because you can make a lot of money. I would guess, and again, I'm just speculating on how all this went down, but they got into the option business clearly without anybody that knew anything about options whatsoever. Like even one retired floor trader could have helped them do a much better job. They've got no idea how options work. They have no idea how to margin them. They have no idea how to vet people to trade them. All of it. They just have no idea whatsoever. But I think the business outgrew them hugely. They kind of became victims of their own success. Like, what do we do? And since they're not charging anybody for anything, how do you get that business going? Especially when you're signing up 20,000, people a day or something like that. So I think they just got run over. I'm glad they got fined, to be honest. And it also, but you need to have like a level of due diligence. And I go through it with all my students at Option Pit. I've been trading options for a very long time. And of course, I just assume that everybody's been slapped in the head as many times as I have trading options. So, and then I realized that's not the case. So, we're an education firm that's trying to actually broaden our reach, because normally we just kind of dealt, to be honest, with basically more active, very active people that want to be pro traders. That's essentially what Option Pit has been. We did pretty good at it. We do a good job at it. But we haven't really, but we are now trying to expand education down to that beginning level. It'll take a little while for us because we have to develop a lot of materials. But yeah, I would say for the most part, they just got run over and they had very poor oversight. And whoever is running their options department, I would be hugely surprised if they ever traded an option in their life. Apparently they have Series 4s, but that doesn't mean they know anything about trading options. Certainly a lot like a TOSAW who's been, kicked in the head a couple times, or me. And I had a Series 4 when I had my own brokerage firm for a very small amount of time until we realized we were competing against Susquehanna, which was not going to work very well. But anyway, that's the. I'm glad they got fined. A lot of the stuff was really stupid, to be honest, especially about trying to encourage clients to close short options and things like that, which is just in their own best interest. So I don't know. I'm glad they got kicked in the teeth, and I hope they get kicked again if they don't do what they're supposed to do, because there's firms that do a better job of that kind of service, and you have to be realistic. You should probably pay something for transactions. I don't think zero cost transaction world is actually good for people. It's almost like giving people free food, although for starving people, yes, that would be nice. But for most people that have too much money, it's like free food. They're going to eat too much of it and kind of, gorge themselves out. So I think on, as far as this goes, I'm happy that the fine was big, and they actually fined somebody for doing something wrong, and not doing a good job at their job. So anyway, that's my take on this one.
All right. Kind of ran a little long, but that's an interesting topic. I know a lot of you have questions and thoughts about that. Great question there, Lauren, and everyone else who sent in similar questions, wanted to know our thoughts. We ran a little bit long. We're up against it, so we'll do a real quick around the block, as well as where folks can go to learn more. We'll start with you, Uncle Mike, sir. Real quick, what are you watching through the weekend until our next show on Monday? And if folks want to learn more about call overrights and silver or anything else, where should they go? What should they do?
Watching the 10-year note, watching the S&P to see if we recover today. And if you want to learn more about what I do as a financial advisor who uses options, who actually respects clients' needs as opposed to Robinhood, follow me on Twitter at Mike TOSAW, or check out my website, stcharleswealth.com.
There you go, stcharleswealth.com. Give him a follow at Mike TOSAW. Mr. Rock Lobster, really quickly, what are you watching for the rest of this week, into the weekend, into Monday? And if folks want to go learn more about your education, where should they go? What should they do?
Go to optionpit.com, go to memberships. And what am I watching? Again, can we be green? Can we close at an all-time high again? I think that the biggest shock to the market was the Chinese government. Look at Alibaba. Look at Amazon. Why is Baba trading below 200 and Amazon is making an all-time high? The Chinese are doing some stuff control-wise, and I think that's not helping their listed companies. Look at FXI for the year. Totally gotten smeared. So something's going on there. It doesn't look super positive, because when big markets like that go down, something's usually up. So that's what I got my eyes on right now.
There you go, listeners. Looks like the warm turning a little bit again back to the dark side. S&P off about a little over 0.8%. Dow closing off 0.9% now. As we wrap up the show, if you need more in your ear holes, you want a little bit more on equities and volatility, maybe some small caps, stay tuned for that. Probably get into some rates, probably some ags, and a whole bunch more coming up on TWIFO with the once and future Dr. Vix in a little bit today. Of course, we're back again tomorrow, noon Central, 1 p.m. Eastern for Vol Views. Back again an hour or so after that. 2 p.m. Central, an hour or so after the close of Vol Views, obviously, for a little show we call Options Oddities. And then back again next Monday, another episode of the Option Block.
Listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.